Good morning from London. I'm Kriti Gupta alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. The Americans are in Europe. Secretary of State Marco Rubio citing progress on peace in Ukraine, while U.S. Commerce Secretary Howard Lutnick negotiates tariff exemptions for the EU. And risk diversion equities catching a bid around the world, but Bitcoin remains under pressure as investors brace for further unwinds. And a short-lived attempt, BHP walks away from a fresh takeover approach for Anglo, ending its second bid in 2 years as the industry looks to consolidate. Guy.
Good morning, Kriti. Good morning, everybody. Huge week last week in terms of the stress test that the markets had to go through. John Williams out of the New York Fed seems to have calmed things down, and the momentum we saw back end Friday is continuing through Monday. Eurostock 50 futures are up by 0.7%. Kriti was mentioning crypto. Bitcoin is down by 1.27% on the session, but had a good weekend, and we're north of 85. Keep an eye on what is happening with the tech story. Look at Alibaba flying in Hong Kong. We got numbers coming through tomorrow, I think. Keep an eye on the tech trade. It's not gone away, has been under pressure. And Brent crude up a little bit this morning. Is that around Ukraine? What are defense stocks going to do this morning? We're going to watch that one very carefully. Lots going on this morning. Last week was huge. This week, Thanksgiving, yeah, but I think there's going to be a lot going on. We've got a lot to talk about, and the countdown to the opening trade starts right now.
It is in my personal view that we've had probably the most productive and meaningful meeting so far in this entire process since we've been involved in from the beginning. We have a very good work product that was already built on a foundation of input from all the relative parties involved here, and we were able to go through some of those items now point by point, and I think we've made good progress.
Marco Rubio, the US Secretary of State, briefing last night on what the situation is with the Ukrainian talks. Let's get a sense of where we go from here, what has changed over the weekend. Our chief European correspondent, Oliver Crook, joins us now from Brussels. Ollie, good morning. What changed this weekend?
I think that's a big question, Guy. We need to see another draft of this agreement after it sort of dropped like a bombshell in diplomatic circles at the end of last week. That 28-point plan that was seen universally pretty skewed towards the sort of Russian position on things, not just by the Europeans, not just by the Ukrainians, but caused a lot of upheaval within domestic politics within the United States. There were a lot of people doing analysis of the language itself. Some people saying that it looked like parts of it were just translated from Russian into English. This is, again, obviously highly concerning for a number of different reasons, but I think the main points to look forward to and to focus on are going to be, one, about territorial concessions. The Europeans have been pushing back aggressively on the idea that any more of the Donbass would be given to Russia than Russia currently controls. And then the second, Guy, I think this is the fundamental question for the Ukrainians, probably the most important point: security guarantees. By what specific mechanism are the security guarantees ensured for the Ukrainians so that the Russians do not invade again? Again, this was only point number 5 on this list, and all it said was that Ukraine will receive reliable security guarantees. That's the end of that sentence. Those are the ideas that need to be elaborated on at this point.
OK, Ollie, you've got some great conversations coming up throughout the morning. We'll come back to you shortly to continue to update us on what is happening here. Oliver Crook joining us out of Brussels. And as I say, he is going to be joining the deputy head of Volodymyr Zelenskyy's office a little later on in the programme. We'll get an update then on what is happening. Let's talk about kind of how this is going to feed through into markets this morning. Not much reaction in crude, but it's interesting. European gas prices just opening below 30 euros for the first time since May 2024. So I'm watching the energy story off the back of this. Let's see how defense stocks open as well.
Yeah, it's a fascinating one. There's defense stocks. You've got to have one eye on the grain space as well. We know Volodymyr Zelenskiy was in Turkey last week, also discussing this conversation. There's, as you said, the defense story. There's also just this idea of whether or not having a peace deal still remains kind of this risk overhang on just European sentiment broadly. Are European equities still taking their cue from that conversation, or is this still a catch-up trade to the United States? And that every kind of twist and turn of this is going to show up in all those asset classes.
Feels like the markets are reacting this morning, though, to John Williams. That's the story. The sit rep off last week was really big stress test for markets, really big kind of upheaval, crypto getting crushed. And on Friday, John Williams out of the New York Fed comes out and signals maybe that actually a rate cut is still a possibility. He's seen as a proxy for Jay Powell.
Yeah.
It's been enough to calm the market story down.
Yeah, it's a fascinating one because two completely different narratives on each side of the Atlantic. Whereas in Europe, there is, I think, perhaps a little bit more questions of whether or not even you're going to see more inflationary pressures, especially coming from energy supply shocks. Interesting that we just got those headlines. It's a different conversation in the States. It's actually part of the narrative and part of the camp to be more dovish is that prices are actually coming down to the point that maybe it does give you that room to then tackle weakness in the labor market.
Got PPI this week. There's a lot of delayed data coming through this week. Home sales data, retail sales data, all coming through. It's Thanksgiving as well, which is another factor which, if you get a surprise, could be a factor in as much as it's likely to mean light liquidity in the market, so therefore maybe you can get a higher rate of volatility coming through. So that's kind of is worth bearing in mind.
Do you have your turkey ready to go?
I do, but that's for Christmas. Bought it yesterday. In terms of what else, crypto's done well over the weekend. It's come back. We're 86, so that's kind of significant that we're north of 85. So that was a big line in the sand last week. So I think that is significant. Feels like a market that's stabilizing a little bit. Feels like it wants to get back on the front foot. But I think that's all we can say. Alibaba is a real story, though. Baba had a really good session overnight, and I just want to gives the tech story a little bit more impetus. It's new. Large language model seems to be doing well. Which
is fascinating because earlier this year when we had the DeepSeek scare, it was the opposite reaction to some of the tech. So the way some of this is being interpreted is fascinating. The green on the screen you mentioned relative to Bitcoin is also something we're going to be exploring throughout the show. Bitcoin down, to your point, only just about 1.3%. You use that word stabilizing. I think that's crucial. The average standard deviation right now for Bitcoin is about 2% in either direction. So if you're less than that, I think it's fair to call it stable.
Yeah, and it had a good weekend. So it came back over the weekend, a little bit more positivity maybe coming through over the weekend in that space. And people are pointing to it as being a kind of canary in the coal mine in terms of what it says about what we are seeing with sentiment. But there's a lot going on, and the John Williams halo effect, let's talk about how long that is going to last. There's a little bit of M&A that we need to focus on as well. It's Monday, M&A Monday, or maybe not M&A Monday. Looks like the BHP deal that was being kind of that came back onto the radar at the back end of last week has already gone away. And I think what's significant here is that the idea that this speaks to the fact that Mike Henry at BHP has talked about the fact he wants to focus on the organic story. He wants to focus on his business. But the fact that he still felt that he needed just at the last minute to make another offer here, I think is significant. And I think that speaks to the shortage that there exists in this market for copper. And I think that is going to be one of the enduring features, that copper assets are hard to come by. Copper is hard to come by. That speaks maybe to A, the macro environment, and B, the kind of the micro environment around what is happening within the corporate and the sort of the commodity space there.
Consolidation back on the table, it feels like in every single sector. This one's interesting, though. Anglo American's currently working with kind of a tech resources deal as well. So this is also a question here of do we start to, combine before we see the competition get a little bit stronger. There's a little piece of that in there as well. But so 2 rejections in 2 years.
The tech deal has been on. That they tried to kind of break the tech deal up.
Yeah.
So the Canadians are still on track. It looks like. What have we got coming up on the show? We're going to talk to Max Kettner. He's going to be joining us shortly from HSBC, Chief Multi-Asset Strategist. Christine Kundby-Nielsen, Danske Bank FX Strategist. There's a lot going on there. What's happening with the dollar? What's happening with the yen? Remember, Japan's closed today. Fiona Boll, S&P Dow Jones Indices Global Head of Equities, joining us as well, as is Christopher Rhodes, Intercontinental Exchange, ICE Futures Europe President. We're going to talk about the budget. We're going to talk about risk events. We're going to talk about Polymarket. There's a lot in that conversation too.
Absolutely. Plenty of data to look ahead to as well. Today, we have lots going on, lots to digest. We should also remember there's a conversation right now happening in Brussels between the United States and the EU. Marco Rubio isn't the only American here in Europe. You have Howard Lutnick talking about these tariff negotiations. We already have that framework deal. How many carve-outs, how many exemptions can you get? Politico reporting last week that pasta, cheese, and booze were top of the agenda in terms of European carve-outs.
They're always top of my agenda.
I was going to say, I think the priorities are 100% right in terms of that. But those trade talks happening today, and we will, of course, have Howard Lutnick, the Commerce Secretary, joining our U.S. colleagues about 7 a.m. Eastern time. I think that's about 12 UK, if I'm doing my math right. That's about 5 hours. Yeah. So he will be joining later, giving us a little bit of a status update as well. Plenty of data throughout the week, retail sales, PPI, plenty of earnings throughout the week as well. I think we're all counting down to, at least here in London, the budget on Wednesday. We've got a budget special on Thursday. And then Friday is, once we get all the UK stuff out of the way, we can go shopping on Black Friday.
Isn't there a Thanksgiving something isn't like
sure, but not here.
I know, but it has an effect here. It has an effect globally. When America's out, it does have a meaningful impact and presents an opportunity maybe for a little bit of volatility. That trade story, I think, is really interesting in terms of where we are, because the pressure's been mounting back. It feels fragile to me. It doesn't feel. We got all the sound and fury around the deal getting done, but it still feels like there's so many component parts that still are undecided, and the Europeans are not happy about certain things, the Americans are not happy about other things. All of this is also happening in the background of we're waiting for the Supreme Court to make its rulings. Donald Trump, the president, out tweeting about that again this morning. So the trade story is kind of ever present to me.
January is going to be really, really fun. Part of that trade conversation, of course, has to do with LNG investments as well. So given the market reaction this morning, it'll be interesting what he has to say on that. What is the price to pay for some of the exemptions on pasta, cheese, and booze is the big question. As we said, Howard Lutnick, who, of course, is the U.S. Commerce Secretary, is in Brussels for those trade talks. That happening at, I stand corrected, 11:45 a.m. London time, 15 minutes than I previously said. So exciting conversation with our colleagues on surveillance later today. And then as we talk about the UK budget, we've got that coming up as well.
So is this budget, so I'm fascinated by this budget because I can't work out whether or not, I can't work out how to read it. So am I reading it through the lens of how does it affect the UK economy? Maybe that's one way of looking at it. How does business react, et cetera, et cetera? Or am I reading it through the lens of if the Chancellor makes a mess of it, does it make her position more precarious and by extension her boss's position more precarious as well, i.e. Keir Starmer, and therefore we're back to talking about internal party politics and the possibility of Keir Starmer being replaced. So I don't know which way to read it. Is it through kind of the party politics lens or is it the economic lens? Anyway, we're going to have a great show. We've got lots to talk about on Thursday morning.
Absolutely. 12:30 p.m. London on Wednesdays when that budget is due to happen.
Yep.
We've got our special. We've got two specials. We've got lots of specials around this. On Wednesday, 12:30 p.m. London time, we have a special. Then OT, our show, has a follow-on special the next day where we're going to talk a little bit more about the market reaction and how you digest it. And it's Thanksgiving in the States. We've got plenty of time to focus on this.
We do. Bring some turkey. Just for Chrissy. Maybe. Maybe cheese, pasta and booze is a better combination. There's always a cost to pay when it comes to cheese, pasta and booze. OK, what else do we need to know this Monday morning? Alibaba shares have jumped after a strong debut of the company's new AI app, boding well for a longer-term effort to build a rival to OpenAI's ChatGPT. The app, called Qwen, was downloaded more than 10 million times in the week after its launch. It follows a move this month to rename and refreshen up the Chinese e-commerce giant's pre-existing apps, unifying the services under the Qwen banner. Remember, the numbers are out tomorrow from Baba as well. Italy has achieved its first upgrade from Moody's ratings in more than, get this, 23 years, marking a win for Premier Giorgia Meloni. Moody's lifted the country's credit score to Baa2, with the outlook now viewed as stable. Moody's was the last holdout amongst the ratings assessors, having waited for Meloni to enter her fourth year in office before finally raising its credit score, recognising Rome's attempt to repair its public finances. Maybe a slightly different story over in France, where the National Assembly has rejected part of the 2026 budget, highlighting the uncertainty surrounding Prime Minister Sébastien Lecornu's approach to tackling that country's bloated deficit. In the early hours of Saturday morning, lawmakers voted against the revenue chapter of the bill. The move sends the text to the Senate without amendments, designed to secure the support of opposition groups at the later stages of the parliamentary process. So still uncertainty reigning.
Well, some movement in Europe. We'll call that a win. Coming up on the program, defense stocks are once again in focus. As progress on Ukraine and Russia talks help boost sentiment, how sustainable is that? Plus, of course, we continue to look ahead to the Rachel Reeves of it all, the important budget this week. Of course, on Wednesday, our special. On Thursday, up next, though, right back to the markets. It's risk on with the possibility of a coming Fed cut. I'm going to chat what that means for investors next. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
I view monetary policy as being modestly restrictive, although somewhat less so than before our recent actions. Therefore, I still see room for a further adjustment in the near term to the target range for the federal funds rate to move the stance of policy closer to the range of neutral. thereby maintaining the balance between the achievement of our two goals.
John Williams, speaking Friday, having a bit of a market impact. Why is that? Well, some people see him as being a J-Powell proxy. Other ones just see him as being the boss of the New York Fed, which is a fairly significant organisation in its own right. It certainly changed the market narrative. The market has repriced the possibility of a December cut from the Fed, as a result of which you're seeing risk assets having a much better time of things. Does that continue? Max Kettner, Chief Multi-Asset Strategist from HSBC, joining us around the table.
Yes.
Yes. There you go. Yes.
Sorry. Yes.
But that tells you that the market basically is trading. It's nothing to do with it's AI a little bit, but it's about the Fed, right? So the Fed is the main driver of this market at the moment. Cut, no cut, has a big impact.
Yeah, I think it does. It probably has the biggest impact, right, on the AI bubble and this whole thing around are we in a bubble or not? I mean, we've been talking about it in client meetings pretty much every single meeting for 2 months now. Or actually,
have you come to an answer? Have you come to a conclusion?
I think people focus on the wrong stuff. Because when we talk about the AI bubble, I mean, number one, when you say we're in a bubble and you don't attach timing to it, I always stop listening. Because it's like, yeah, cool, you can tell me that for 5 years. And then after 5 years, you'll be like, told you so. Like, great. So that's one thing. If you don't attach timing to it, it's kind of pointless. And number two, I mean, if we're all in agreement, when we just look at the data, what's been rallying the most in the AI trade was the hyperscalers, was the CapEx names.
Yep.
So therefore, what we need to look at is when is the time when CapEx actually, or the delta in CapEx growth might actually not only go down, but might turn negative. That's the number one thing. If we talk about, but is AI going to be boosting productivity in 2033?
Answer that question. Where is that going to happen?
I think there is a risk from 26 to 27. I think there is a risk because the big, beautiful bill incentives are essentially, for me, pulling forward so much growth. All these CapEx incentives, right? These, which are super bullish for AI CapEx in the next, call it 1 or 2 quarters. But we go perhaps after summer or into the midterms where we realize actually we've pulled forward so much growth. We've borrowed so much growth from 2027. Is there a risk that we get maybe at least a tiny bit of a negative fiscal impulse and a negative impulse from CapEx growth? But that is not for the next 2 quarters.
So the bubble's got a year to go, basically.
According to Max Kettner. Big caveat there. Yeah. I say that in love. It's one take. Brutal. Max, leave me alone.
Leave him.
This is too early for 7:20 on a Monday morning.
I've been up for a while. I'm ready. I just meant it's one view.
She's been preparing for your arrival.
Still bitter about commuting guidance you've given me. Talk to me a little bit about the Fed repo pressures. There's been a question here that in the last couple of weeks, because of the wobble that you've seen in the tech market, that some of it is because you are seeing funding pressures in the repo market. Yeah. Are those related at all?
Oh, I don't think they are related. I think the funding pressures, if anything, when we look at it right now, if anything, what they do is, and if they do persist, and if they perhaps get even worse, I think what we will be then seeing is perhaps even more of liquidity support from the Fed, right? They're not going to call it QE, but it's going to be maybe reverse repos or whatever, some sort of liquidity injection to avoid a year-end funding squeeze if it does get even worse, right? Which it doesn't look to be the case right now. I think it really, really was the repricing of the Fed, because when you look at what's really been hit the most, it wasn't really the S&P. I mean, come on, the S&P is down 5% from the all-time high. You know, you look at credit spreads, they're barely widened. You know, look at emerging market assets, right? Like if you look at emerging market rates, if you look at the dollar, for example, the dollar has been sort of a tad stronger against G10, but most of that was against the yen. It wasn't really broad-based, and it certainly wasn't an EM sell-off in FX either. So it wasn't a classic risk-off. It was really a risk-off driven by the sort of the most rate-sensitive stuff in equities. So think your non-profitable tech, I think your Russell 2000, right? That outperformance really started to wane a little bit. So that was, to me, related really to that tiny bit of pricing out of terminal rate expectations. You know, a couple of weeks ago, we were at almost 280 in terminal rate expectations. Now we're at 305. You know, in the grand scheme of things, who cares? Whatever. We go from slightly below neutral to slightly above neutral. But of course, if you're uber long, those uber rate sensitive assets and parts of the market, that matters immediately.
But is that a one-time thing? I mean, if you look at you're a multi-asset strategist. If you look at the correlations going across asset classes, it feels like the bond market is beating to a different drumbeat than the FX market. The stock market is maybe taking, at least this morning, a different cue than what your cryptocurrencies are taking. Is this a market that's actually in sync with each other?
I think it is in sync because, again, if we go from a terminal rate from 280 to 305, if we price out one cut on the terminal, in the grand scheme of things, if you're long Nasdaq, if you're long the Mag 7, who are uber profitable, do you really care? Nah, not really, right? If you're long the S&P, you're long cyclicals, or you're long Europe, or you're long credit spreads, right? Like if you're long credit, if you're long high yield, does that 25 pips, does that move the needle? If you move from slightly below neutral terminal rate pricing to ever so slightly above? Not really. Where it does move the needle is those tiny, highly leveraged and highly leveraged parts of the market. That's where it really moves the needle. But I don't think that is the trade that everyone's got on. No? If you're a long only, you're not going to be uber long to the moon, non-profitable tech. I mean, you're benchmarked to the S&P or the Stock 600. You can't be, because that stuff is not in your universe. So it's probably sort of a fast money hedge fund type of trade, where we've seen, obviously, quite a bit of unwinding in the last 2 weeks.
Is that who's been selling? So who's been selling? Who do you think has been selling in the last couple of weeks?
I think it was two things: fast money and systematics. And
right.
even according to our estimates, really systematic positioning has come off quite a bit already.
Is there a connection between crypto and retail?
Probably, but I don't think it's actually that big. I mean, I was always surprised to see, when you look at some of the academic papers, that retail ownership of Bitcoin overall, right, depends how you define it, but it's only about 10%. I would have, personally, I mean, look, I'm not a crypto expert, I'm not a Bitcoin expert.
Sure.
But I would have thought it's
But is there a signal here?
50%.
I want to know what the signal is.
Yeah.
Because I read a lot of stuff over the weekend that crypto is this kind of canary in the coal mine. Is that true?
Well, but I don't know. I'm not. You see that
I'm
from
going
my
with a
face.
no there.
I'm trying. I'm trying to be as excited as possible.
Yeah.
I can't really see it, because the thing is, where I think there would be a canary on the... For me, the canary is in the coal mine. We literally wrote it last week that was called The Canary in the Coal Mine, because I go into the office every Monday and there's a new canary in the coal mine. You know, a couple of weeks ago it was First Brands, and it was like, oh, now it's tech debt issuance, now it's crypto, and it's Michael Saylor and MicroStrategy. I'm like, okay, sure, fine. But at the end of the day, the canary coal mine, from an aggregate perspective, from really to make things systemic, is when top-down, when aggregate numbers really deteriorate. That, to me, is much more important. Think about private credit. Well, the reality is, if you look at private credit, I know people are really worried about BDCs and all this, but in order to say, look, this is the canary on the coal mine, this is systemic, it's got to be big enough, right? It's got to be really big enough. And then you need to look at the aggregate numbers. You look at private credit, for example, and actually, the aggregate default rates have started to go down. The same thing is sort of happening on crypto. You look at crypto in terms of market cap versus overall asset classes, it's just too small to really move the needle to be like, oh my God, this is going to blow us up.
All right, well, 30 seconds here. Let's talk about the credit space, because you had kind of mentioned that some of the default rates are coming up. I thought it was interesting that some of the credit deterioration is kind of where the bigger move has happened. So you've seen like the triple Bs maybe drop into like a C, for example. Is that the bigger issue, or are we waiting for a bigger change in default rates?
I mean, default rates have been coming down as well. No, you look at default rates, private credit, high yield, they've all come down as well. And normally what you see historically is as they sort of roll over, it's kind of tough to stop them. So if anything, maybe actually the year ahead we're talking about not a deterioration, but actually an improvement in aggregate default rates. Of course, we can always look at these single name stories, but the aggregate story actually might look even better.
Yes or no? Is Santa coming? Is the rally coming?
No, it's Krampus.
Krampus.
Clearly, it's in Austria. We look at Krampus now. It's the really scary,
Okay. Yeah. That doesn't bode well. Okay. Nice to see you, Max. Max Kettner, Chief Multi-Asset Strategist at HSBC. This is Bloomberg. Monday morning, good morning. 30 minutes to go until the start of equity trading here in Europe. Futures looking pretty positive. I think we can thank John Williams for this. The New York Fed president certainly giving the market something of a lift Friday, and that feels like it's continued into Monday. Euro Stocks 50, 9/10. FTSE futures, 0.5%. CAC futures, 0.7%. There's a lot of ex-dividend in the Italian market today. Just be aware of that.
Absolutely. Let's talk about what's going on in the bond market, because you did have, of course, the Japanese markets closed today. So we're getting a little bit of a late read when it comes to what this bond market is thinking. Over in the States, not really seeing a bid for treasuries, but you are seemingly seeing a bid for European bond markets. Yields across the board down about 1 basis point. 2 over in Italy. How much of that has to do with the credit rating? How much of that has to do with, or credit rating change in Italy? How much of that has to do with some of the politics in France as well? Lots going on in that sphere. But does the bond market really relate to the FX market here. Let's get another perspective. Kundby-Nielsen, FX strategist over at Danske Bank, joins the program this morning. Pleasure to have you, Kirstine. Walk us through kind of how the connective tissue between what we're seeing in this bond market, driven by either the Federal Reserve or the ECB, and how that's translating to the FX space. Are these two markets that are related?
Well, I think the price action that we're seeing in eurodollar lately definitely reflects it as well. I think we're seeing a Fed that is very split in terms of what the next move is going to be at the December meeting. As you said, John Williams, without really pushing this more talk of a near-term rate cut. But otherwise, it seems to be a very split Fed, and I think that's also what the market is really highlighting. I think just with the government shutdown also, this lack of data, it really leaves a tricky back foot for the market, how to trade this. We're still kind of more in the unknown of the state of the US economy. We had payrolls, and then on the other side, we have the ECB firmly on hold. And I think that's kind of an underappreciated story in many ways. We're actually seeing quite supportive data in the Eurozone on growth, on fiscal spending in Germany and so forth. So I think that's definitely an underappreciated risk.
Kirstine, is further weakness in the U.S. economy, is that dollar positive or dollar negative?
I think further weakness in the U.S. economy, that would be dollar negative. It's something that we pencil in at least to some degree in our forecast. We have a forecast over a more strategic horizon where we expect euro-dollar to move up to 122. But I think in the near term, I think focus is really on what the Fed is going to deliver in December. But I think we'll still see an economy that is on a relative solid footing. Again, I think I really like to talk about the labor market as cooling, not collapsing. But I think if we do see a pronounced weakness in the U.S. economy, that would definitely be dollar negative.
Kirstine, can I go back to the issue of Germany? Where are you seeing the positive data in Germany at the moment? Because I'm really struggling with this. And everybody's telling me that it's coming, that Germany is going to look good, the economy is going to be performing well going forward. Yeah, the PMIs were okay. But I'm not feeling this kind of huge German economic push that everybody was anticipating. And if I don't see it for much longer, do you think there's a risk that the ECB cuts again?
Definitely agree. I think if we don't start to see some of this fiscal impulse reading through, I definitely think that would be a dovish sign for the ECB. Pronounced members such as Schnabel is really putting a lot of weight on this fiscal impulse in Germany. I think what we're seeing in terms of the draft budget for 26, they ramped up spending a tiny bit further, a tiny bit more issuance, but again, a small increase in a large number. And then we're seeing, maybe not on a structural horizon, it will be as positive, but we're kind of seeing that they will lean to more like in terms of taxes, and they're looking more at like energy redemptions and so forth, and not as much the structural thing. And the structural thing, that would be more positive on a longer term horizon, but these other measures, they're set to feed through more quickly. So in the euro area, it's definitely still the southern European countries that are really pulling the weight. Domestic demand is still strong in those economies, but I think as we start to progress into 26, we will slowly start to see an improvement in Germany as well. But it's definitely a risk, as you say, that it won't be fast enough, it won't be pronounced enough. Yep. Will it generate inflation and so forth?
Are you buying or selling the pound into the UK budget this week?
That's a good question. I think it's the event everyone is looking forward to. I would say covering the budget here the past couple of years, I would position more for a weaker sterling. I think everything that has to relate really putting focus on political uncertainty. I really see kind of two scenarios unfolding in a base case. Either they really deliver the significant tightening of fiscal policy that I think especially the gilt market is really hoping for. I think that could, like on the day, it could be a pound positive, but I think that over a longer term horizon, a significant tightening of fiscal policy, again, will be sterling negative. Or otherwise, they won't tighten sufficiently and markets will become spooked yet again. And I also see that as sterling negative. So I think in terms of the sterling and in terms of the FX market, I see it being quite negative, to be fair. I think it's a very tricky balancing act that the government just hasn't managed to get right, at least during its tenure here the past year.
Christine, following up on the UK budget, what do you think the pound responds to more? Is it actually the contents of what Rachel Reeves announces, or is it perhaps the political jitters that might follow in terms of whether there could be some sort of leadership shift within Keir Starmer's government? What do you think? What moves the pound more?
I think political jitters, if we get something that's more similar, for example, that they try to do smaller, different amendments to the budget, trying to raise revenue, then markets might become spooked. Okay, is this really a revenue risk? Can we actually generate revenue? I think there's definitely some focus on the political instability there. But again, I think it's twofold. I think it's both the revenue risk and the political instability, but it really comes down to the extent of what the measures we're going to get on Wednesday.
Christine, let's continue our tour around the world. We've done the United States. We've certainly done Europe. Let's talk a little bit about Asia and talk about the yen. It felt like the yen was the conversation at the end of last week. You have a hawkish BOJ. You have a prime minister who's talking about quite a bit of fiscal spend. Should we be expecting more intervention, or any intervention, not just verbal, but actual currency intervention in the next coming of weeks, and at what levels?
I think what we usually, and what they also tend to emphasize themselves, is that it has to be a rapid move in the exchange rate. So it's not just the level, it would be more, I think, just the pace of the move as well, where we usually see that the Bank of Japan really starts to intervene. So I think that's definitely a question. I think you can't ignore outright levels. I think when we're around this 160 mark and so forth, it's definitely something that they're attentive to. But it's not our base case, but I wouldn't rule it out. I think this very significant shift that we're really seeing in terms of political developments, I think we're seeing curve steepening in Japan. We're seeing just this really Abenomics kind of approach to the economy, where it's really fiscal spending. We also want monetary easing from the Bank of Japan. It leaves a quite tricky backdrop. It definitely does, and I think that's been very well reflected here in the yen over the past weeks.
Christine, it's the 24th of November, not December. Isn't it a little early for a Christmas tree?
It is, but it started to snow in Denmark, so I guess that's what explains it as well.
Yeah, I think December is kind of the deadline. You can start maybe after December the 1st.
Please.
You can.
I'm totally team Christine. On November 1st, my tree was
November
up.
the 1st?
I was ready. The minute Halloween was over, I'm done. And by the way, might I just say, the Bloomberg Christmas tree has been up for a couple weeks now in New York. Just saying. We're in the majority.
Too early. Far too early. Snow maybe is a good indicator, though. Kundby-Nielsen, Danske Bank FX strategist, thank you very much indeed. Certainly not snowing in South Africa, where the country's president, Cyril Ramaphosa, striking a final agreement with G20 countries at the summit that's just happened there, despite American threats and false claims of white genocide by Donald Trump. The meeting brought together nations representing a significant portion of the world's population, with Canadian Prime Minister Mark Carney saying the world will move on without the United States. Bloomberg's chief Africa correspondent Jennifer Sabasaja joining us now from Johannesburg. Jen, what came out of this? Because there's a lot of noise around this event, but I'm wondering if there are any concrete takeaways.
Right, Guy. If you take a look at just this grouping of the G20, it makes up 2/3 of global GDP, 3/4 of global trade. And so many people were looking for those concrete takeaways. Of course, we did get that declaration despite the threats from the U.S. To actually issue a declaration and dig into this a bit more. And many investors may pay close attention to the focal point, which ultimately in many ways became on this issue of critical minerals. Last year, we only saw a mention just briefly in the declaration that was issued at the G20. This year, there was a dedicated section in this declaration about what many of these leaders described as unilateral trade actions, which many people interpret as potentially a veiled swipe at China. We did have a Chinese official who was there who did agree to this declaration. But really the question moving forward is, if you take a look at what we have seen from China over the past few weeks and months, what does this potential opening then of working together and working more cohesively on this issue of minerals and access to rare earths mean ultimately? Because, of course, this declaration is not binding, and really it will come to the details and the agreements that are moved forward that will ultimately be tested. And we should, of course, point out that many of you already know the U.S. is taking over the G20 presidency next year. We did see President Trump meeting with Xi Jinping not too long ago. And so this question about critical minerals, how the global South ultimately benefits and what investment flows then look like is on many of our minds right now. But ultimately, people are saying that this was a successful G20 summit for South Africa and for President Ramaphosa, despite, as you mentioned, there are a lot of the noise that went into this going in.
Great stuff, Jen. Thanks for the update. Busy weekend. Our chief Africa correspondent, Jennifer Sapajaza, joining us in Johannesburg. What are we going to talk about next? We've got 18 minutes to the equity market open. You're going to keep an eye on what is happening with some French stocks. A lot of politics there over the weekend. Uncertainty hanging over a plan to tackle the deficit. Parliament rejecting that deal over the weekend. Keep a firm eye this morning on defence stocks. They could be one of the biggest moving sectors of this market as well. Anyway, we'll get back to that in just a moment. 18 minutes to the market open. This is Bloomberg.
About 15 minutes away from the opening trade. Green on the screen across the board. You can see the outperformance actually in the generic index, Eurostoxx 50 futures. But I think what's interesting is the DAX futures are higher by 0.9%. There might just be a defense theme in here. There might be a tech theme in here as well that's echoing throughout these markets. Let's focus in on the tech theme, given that we've already talked about defense just a little bit. Hints of looser U.S. export rules are reviving hopes of Nvidia's China comeback. Bloomberg has learned that U.S. officials are having early discussions on whether to let Nvidia sell its H20 artificial chips to China. Turns out China also may just have another AI contender as well. Lots to discuss with our very own Tom McKenzie, of course, the anchor of Bloomberg Tech Europe. We'll start with the Nvidia story, then we'll go to Alibaba's offering. How important of a deal is this with the H20 sales to China? We've already seen a little bit of back and forth. How real is this?
So the focus of the internal discussions is on the H200. So the H20 is a chip that is facing already export controls. It's a chip that was designed specifically, the H20, for access to the Chinese market. Then the Trump administration put export controls on the H20. So that's one chip. This is a conversation about an H200, which is a more powerful type of chip than the H20. It is the generation prior to the Blackwell chip, to NVIDIA's Blackwell chip. So it's one generation behind the chip that AI hyperscalers are getting access to right now, more power from the H20. So it will be very significant in that respect. It would give the AI companies in China a lot more capabilities than they currently have. The H200, yes.
And the authorities would be...
Well, that remains a question. The authorities are able to jawbone their companies not to buy the H20 because it is far less capable than the H200. Do they jawbone their companies and pressure their companies not to buy an H200 if the US gets to a point where it's decided to sell those chips into the Chinese market? I think remains a very live question, because HiSilicon, which is the company that is sitting inside Huawei and is the most advanced in domestic AI chips, has a proposition that can compete with the H20 on some levels. The H200, though, the gap is bigger and more significant. And of course, Nvidia comes with the software, it comes with the networking capabilities, the whole package. Huawei is working on that, but on the H200 versus Huawei and what HiSilicon is making, the gap is much more significant.
Talk to me about Baba. Actually, talk to me about Baba and Alphabet. I want to talk about both.
Yeah.
Let's start with Baba. Seems to have had a really solid week with Quen. A lot of people are downloading it.
Yeah.
The share price has reacted very positively. Just put this in context for me. How good is this? Does it compete with OpenAI? Does it compete with some of the models that are coming out of the United States? Kind of what is the performance prospect here?
Well, it's a reminder that China and companies like Alibaba are able to put very, very effective products on the market that get massive traction in that market when they don't have access to the most sophisticated chips. Okay, look, Alibaba would deny that they access the Blackwell through other supply chains. It's possible they've done that. There's no evidence that they've done that, but certainly there's evidence that they've talked about, or analysts have looked at the fact that they may have stockpiled chips prior to the most restrictive exceptions. So they have used and maybe still are using some form of Nvidia chips, but they are also using domestic supply chips as well. And it's testament to the engineering skill at companies like Alibaba that they're able to create products that are as effective as QN. So this is a rebranded version, essentially, of ChatGPT, which is banned in the Chinese market. It's meeting some of the metrics of ChatGPT. It's still in this kind of phase where they're lining it up against the kind of bots or chat models you're getting from the likes of Anthropic and Gemini to see where it sits. But on some metrics, it's getting close to that point. They're very, very ambitious as well. They want this to be agentic. They want this to be doing. They plug it into all of their platforms. They want it to be doing your own e-commerce, travel booking, payments, all of that in a period of time. They're not there yet. But the fact it's been downloaded 10 million times with this rebounded app suggests that there is that appetite in the Chinese
I think
market.
the Alphabet story is fascinating as well. The fact that Gemini is doing what it's doing without necessarily leaning too heavy on Nvidia, I think is also worth paying attention to. Anyway, I've been told
they have their own chips, TPUs,
precisely,
and they have the full stack Alphabet when it comes to the AI story,
because
they have their chips. They obviously have the direct to consumer. They have their data centers. So Alphabet is standing, in some respects,
toe to toe.
So at least, and Gemini 3 was very well received.
Yeah. Tom, great stuff. Fantastic stuff. Tom McKenzie on what is happening with the tech story. Let's talk about the market story and how it relates. Skylar Montgomery-Koenig joining us around the table. Good morning.
Good morning.
Am I going to have another busy week like last week? Can I just look forward to Turkey, or is it going to be bumpy?
I think, yeah. We're still very much in a choppy trading environment,
okay.
I think is the headline. We talk a lot about the center rally into year-end, then people get optimistic, but I think what's less appreciated is that there's also a seasonal component to volatility. So you see that it generally tends to decline into the Christmas period and into the summer. Now, in theory, that's a positive. I think the issue is, yes, you decline into Thanksgiving, but you don't really get more subdued volatility until the middle of December. So that's still a couple of weeks away. And you don't really have any use for seasonals unless there's a reason for them. And the reason that seasonals decline at that point in terms of volatility is because you have fewer central bank meetings, you don't get data coming out, and we have the opposite right now. We're getting an excess of data coming out. You also have the December Fed meeting where there's a lot of focus for that meeting because we're unsure of whether or not they'll cut, or at least the market doesn't have a strong view either way. That pricing needs to shift into the meeting, or at least, if it comes down to the wire, you'll have the shift on meeting day. And that means that you're still in this kind of choppy environment because your two seasonals that are supportive in terms of data and Fed aren't there.
How much of the rally that we've seen so far, and even arguably the rally we're seeing this morning, is dependent on the Fed continuing to grease the equity market's wheels? In other words, how dovish does the Fed need to be to sustain the green on the screen?
Yeah, I think it depends on what kind of time frame you're looking at, right? So if you have a Fed that doesn't cut in December, that's certainly not positive for equities into year end. I think, though, in the longer term, if the Fed keeps cutting towards 3% and the easing cycle that we're in currently, then that can be quite positive. We're not talking about this yet, but if you have a complete 180 on the Fed, as in we're not looking for any more cuts, we're starting to think about hikes into 2026, which I think is a real possibility when you think about the fact that we've had monetary easing. We're close to what could be a neutral rate in the U.S. You have fiscal easing that could get more aggressive into next year with talking about kind of helicopter money around $2,000 just being given out to U.S. Americans. If that happens, then I would start to get more concerned, or if it's inflation-led, because for the equity market, it cares very much what's driving inflation. If it's growth inflation positive, then that's positive for equities. But if we just have inflation without the growth, then I'll start to get more worried too.
In terms of what else we're going to watch this week, how big a factor is the budget going to be? Is that the main event this week out of the UK?
Yeah, definitely for the UK, it's the main event. I think, though, I'm less pessimistic than generally people in the UK tend to be, or even the market is. There's a lot of
very optimistic people.
There's a lot of pessimism priced in, I think, is number one. And I think what we underappreciate is that the government, while it may not be the smartest thing ever, they kind of test the market before releasing the budget. We had that test a couple of weeks ago.
So there's no danger that gilt volatility translates into wider bond market volatility?
Oh, no, there definitely is that risk. But I think it's maybe less worrisome now that you've had the market tested once on the budget already.
Okay. We are optimistic people, honestly. We just don't sound like it.
Yes, we all saw that. We see that every day, don't we? Skylar Montgomery-Koenig from Bloomberg's Markets Live. We thank you so much. Let's go from the macro to the micro. Get our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with French stocks today after the National Assembly rejected part of the 2026 budget. And usually when we've got this kind of political turmoil in France, that is reflected in the shares of companies most exposed to that domestic economy. So we're thinking about the banks, but also those infrastructure construction companies like Vinci and Eiffage. One thing to note is that there is still some optimism in the government that a budget will be passed with, for example, this Minister for Parliamentary Relations saying that he sees the glass half full and that there is this majority that exists that wants that stability, and that might push things forward there. Moving on to some mining M&A, and it has been a busy weekend. BHP has made another offer for Anglo American. Anglo American rejected that offer, and now BHP has walked away from that deal. So this was an unexpected bid from BHP, an attempt to block the current tie-up that is ongoing between Teck Resources and Anglo. So we'll see how Anglo American shares react to this morning. This is a company that's actually been outperforming BHP since the end of that first takeover bid back in 2024. We'll see if that continues today. And finally, trucks are also in focus. The companies like Traton, Daimler Truck, Volvo are facing potentially billions in damages as part of a series of price-fixing disputes. So all of those companies have paid a total of already 3.8 billion euros in fines as part of this litigation that covers multiple jurisdictions. And now lawyers are saying that this is not really a matter of whether or not they have to pay up on top of this, but just how much. So definitely a story to keep an eye on as well throughout this week.
Chloe, thank you very much indeed. Chloe Milley on some of the stocks that we're going to be watching. I just want to add one more thing that you maybe want to pay attention to this morning. Rheinmetall was down 12% last week, and the expectation is, given what is happening on the geopolitical front with Ukraine, that stock could fall further, as will the sector, into the open this morning. That is going to be one of the key things you want to watch. It's next. This is Bloomberg. Monday morning, good morning, 24th of November. That date kind of just tells you something. Time to start shopping for that Christmas gift that you haven't got yet. Let's talk a little bit about what people were buying on Friday and why. You certainly saw a decent rally in the United States. The reason for that appears to be the comments we got from New York Fed President John Williams. He certainly put the possibility of a Fed cut in December back on the table, and US markets loved it. That's where Europe went at. So you've got a little bit of positivity still to price in from a European perspective, which is showing up in the futures this morning. But US futures are also higher, so just bear that in mind as well. We're going into this week on the front foot. John Williams, thank you very much indeed if you are along this market. Stocks 50 futures up by 0.9%. FTSE's up by around 0.5%. DAX futures are up by 0.8%. Now that's interesting because defence stocks are likely, Kriti, to be under a little bit of pressure, aren't they?
Yeah, it's a fascinating one, although the market around the world is higher. So if you're looking at the defense story, maybe you are going to see that be the pressure point around the world, but maybe made up for the fact by tech is getting a massive boost from around the world as well. We know the SAP story is in those DAX futures as well. We also have some potential moves in the pharmaceutical industry. Keep an eye on Germany today. Very, very crucial. We should also talk about, we kind of got a consolidation attempt, very, very close over the weekend. Second attempt in 2 years between the likes of BHP and Anglo American. Don't worry, you didn't miss anything. At the end of the day, we're right back where we started. They are two separate companies, but I am curious if it is something that starts to ripple effect in the mining space. So those are the three sectors you want to watch. Defense and tech for the German index, miners for the FTSE, and I guess green on the screen for everyone else, Guy.
Absolutely. Keep an eye on some of that European tech, SML, SAP, etc. Beginning to see how that trades this morning. Defence stocks could be under a little bit of pressure. But the momentum coming out of the United States Friday is feeding through into us here in Europe Monday. And this is what it looks like. Here we go. The opening trade looks a little bit like this. The FTSE 100 expected to be up by, let's call it circa 0.5%. Maybe a little underperformance coming through there. But it's going to be an interesting week for UK assets with the budget very much on the horizon. So we're climbing a little bit, maybe not as much as anticipated. We'll wait for that market to get going a little bit. Remember, there's a lot of Italian XD in the market as well. So when you look for maybe the rating upgrade effect coming through into Italian assets this morning, just bear in mind that a lot of banks are going ex-dividend. CAC yet to open. DAX, SMI, IBEX still yet to open as well. There's the IBEX up by 0.9%. There's the CAC up by 0.6%. FTSE's now at 0.4%. The Germans are going to take their time. We'll wait and see what that market looks like. Defence stocks are going to be an interesting side on this story this morning. What are they going to do on the back of what we're seeing around the Ukrainian story? I think is going to be a fascinating trade too. But keep an eye on energy, keep an eye on miners, keep an eye on the tech trade as well. Kriti, what have we got?
I mean, you said it exactly. Those are the three major sectors that are moving here. Let's start with the energy trade because that's the one that seems to be moving the market the most. I'm seeing the likes of Shell, I'm seeing the likes of Eni down. So if you're worried about some of the drops that you're seeing in energy prices, some of this has to do with geopolitical risk. That is where you are seeing the pressure. I should also mention we're getting early reads on the defense sector. Saab, for example, we'll call that our proxy for the others as they are kind of take their time to open. Down about 3%. Total also in the red. BP also in the red. So there you go. There's your geopolitical read-through. The rest of the market, 465 stocks in the green. And the outperformers, I mean, start off with a pharmaceutical story, your favorites, Novo Nordisk, your Sanofi's, your Roche's. It then graduated to ASML and SAP. So tech and pharma leading this market, defense and energy are your laggards.
If you see Asia having a good tech session, you see the US having a good tech session, and you just buy these stocks.
Get in on the party.
It's the proxy. HSBC was up quite strongly overnight in Hong Kong. It is trading quite well as well this morning in the London session. Luxury's on the front foot. But as you say, elsewhere it is the energy story and the defence story that is dragging us down. There's all that kind of Italian XD in the market as well. So names like Intesa Sanpaolo, all of those names not reacting to the rating upgrade, but we're all reacting to the fact that we've got a dividend payout, which we need to factor into our thinking. But as you say, very much in terms of the weight, it's a market that's on the front foot, 460 up, 100 down. So you've got a pretty big balance pointing us in the positive direction this morning.
And you made this point last week, actually, that some of the defensive names that we tend to see outperform in kind of a scary, risk-off kind of environment, your Nestle's, your National Grids, they're actually down today as well and driving the market, the downside of the market as well. So it's just another indication that people are looking to buy risk later today. I'm curious how much volume we're seeing. I should also mention one specific mover, Bayer, higher by 7.5% this morning. It is in line with some of the pharmaceutical gains. It's also due to some positive drug study results as well. It looks like their experimental stroke prevention drug has been showing some positive results, and the market rewarding it for it. Shares, I mean, bouncing as I'm speaking, higher by 9%. So pharmaceuticals having a good day in multiple respects.
Good news to see some buyer positive news coming through. That will certainly help out the German market, which is going to be hit by the names like Rheinmetall, etc., which are going to be dragging us down. So how do we feel this Monday morning? Risk on? Certainly that seems to be the tone generally in the market. Is it enough to carry us forward? Are you feeling risk on enough to talk about a Santa rally? Let's ask Fiona Ball, Global Head of Equities at S&P Dow Jones Indices, who joins us around the table. Good morning.
Morning.
Last week was choppy. Last week was nervous. How are we feeling this week?
Last week was definitely on the nervy side. Look, I think the news over the weekend was probably relatively mixed. We think about geopolitical. We look at, as you were already talking about, the defence stocks. Got 6 weeks coming into Christmas. Expect a relatively quiet this week usually with the US holiday. But let's see.
Maybe not. There's a lot of US data coming out this week, which we normally wouldn't get. So maybe that's an extra kind of incentive to drive volatility higher. But in terms of kind of where we are, what seemed to change the tone Friday was just John Williams from the New York Fed coming out and saying, yeah, maybe we do see a December cut. Is that what the rest of the year really now hangs on, whether or not the Fed does or doesn't deliver 25 basis points on the downside?
I think that's going to be probably the key data point that we look for over the next couple of weeks. We expect that we'll see, potentially some more interest in dividend-type strategies as people are looking for hunting for income based on that idea of a Fed cut now and more Fed cuts next year. But I think the Fed decision's the big one to watch for.
How dependent is this rally on that? Is this market still sensitive to things like valuations, or is this purely about monetary policy?
Look, the S&P 500's up 12% year to date, right? Not a bad year. Certainly well above, historical, average performance you'd expect from the US equity market. Valuations have been stretched. They've been stretched all year. We've seen that flow into markets outside of the US. European valuations also historically looking stretched. But we've still got tailwinds as well. So, maybe we are in for a Santa rally.
Well, that's in the States. Does the valuation argument apply to the defense stocks that we're seeing drive this market? So we're seeing them down today. There's a geopolitical read-through as well. Is there a valuation conversation to be had around the Rheinmetalls, the Hensoldts of the world?
Look, defence has been one of the great sector stories of this year. If you think about where, a heap of money's flowed into new ETFs, there's been more than a handful of new European defence ETFs, and they've performed very strongly. I think it's, not unreasonable that with changes to the geopolitical landscape, news stories coming out over the weekend that, you might see some pressure there.
You talk about the 12% that the S&P has delivered. If I'm a euro investor, it's 1%. European cash has outperformed the S&P this year. What do I do with that? What are you seeing in terms of hedging? What do you think you do next year do I need to hedge my US risk from a currency perspective?
We've certainly seen flows into European equities. Like a crazy stat from that I was reading last week is that flows into European beta passive ETFs up 30-fold this year.
Right.
So we've already seen...
US money or European money?
I would say that's largely European money. So we've already seen European investors adjust their portfolio, and they've been doing that all year. And as you said, part of that reason is that in local currency terms, that US equity exposure hasn't been fantastic. In fact, it's probably been bad. So what do they do going forward? I mean, we expect that there will still be very strong demand for non-US exposure going forward, whether that's Europe. Latin America has also performed very well this year, and there have been pockets in Asia of specific country performance that's been very strong.
What do you think how does Europe look next year? Everybody's got very excited about the fact that the Germans are going to be spending a lot of money, and as a result of which we're going to see this kind of economic powerhouse at the heart of Europe driving sentiment, making it more positive. I'm not seeing it yet. I'm not seeing it showing up in the data. Is Germany going to... how critical is it that Germany actually delivers on that fiscal narrative for European equities to hold up?
Well, the German economy is largely what drives the European economy. We know that. So, where they go, the rest of the European market will follow.
So, yes, quite important.
It's very, very important.
Sticking with the German theme a little bit, so much of that has to do with some of the way that the European bond moves are trading. I would ask you about the bond market, but I am curious about whether the equity market is going to be taking its cue from the bond market. Is this a rally? Are we dealing with a lot of luck here, given that the dollar's range-bound, the bond market's range-bound, and frankly, so is the commodity market? Is this luck?
Luck in terms of the current equity, cross-asset luck. Look, there are points and there are catalysts that underpin the current performance in European equities, right? We've seen defence, as you said. We've seen strong performance in some of the pharma. So we will need to see that continue for that equity market to stay elevated.
What about things like, I mean, we have so much of a focus on the geopolitical risk and the conversation happening in Geneva right now around Ukraine. There's another conversation happening in Brussels right now around potential tariff exemptions between the United States and the EU. Do trade and tariffs matter for this market?
Absolutely. And again, if you look at the markets outside of the US that have actually performed pretty well this year, it's been those ones that have been able to navigate the tariff story. So it's been Europe and it's been Latin America.
Do you do it on an index level, or do you do it sector by sector? So if we're talking about auto carve-outs or we're talking about food carve-outs, then we need to go sector by sector, or is it simply the U.S. likes, Europe more than they like Switzerland, and therefore Switzerland underperforms? How do we think about that?
I think you can think about it either way. I mean, we've seen, again, at the country level, some countries have done, particularly well at navigating that. And then if you go back and look at the sector level, you've seen some real laggards, and you can point to tariffs as being one of those reasons.
Can I just get your kind of bigger picture take on what happens next? One of the themes that certainly is very present in this market is the idea that passive money is just mechanical money. That as the market goes higher, it pulls in more money. It's almost a self-fulfilling prophecy. A lot of people are talking to me about that working in reverse. If the market does roll over, if we start to see some turbulence, that actually you could see that money coming out. Is that how you see this market working? Are the passive flows just what is just mechanically driving everything at the moment? And it doesn't matter what valuations look like. It doesn't matter. We talk about all of these other factors, but it's just that kind of that relentless amount of money that flows into passive funds week after week, month after month, quarter after quarter.
I think there's a few points to remember. I mean, passive money is still making a decision, right? It is still going to a certain country, going to a certain region, going to a certain sector, or going to a certain strategy. Could be going to factors, could be going to dividends. So we're not talking about this wholesale flow of money into one single product. And the other thing I'd say is that, the work that we do that looks at passive versus active performance, our SPIVA reports, shows that even during periods of turbulence, active managers don't outperform.
Sure, but if the market goes down, how self-reinforcing does the money on the way? The market is kind of being driven higher by just the weight of money that is coming in. Does that work? Could that work in reverse?
It could, but I mean, I think our expectation is that we just see that money change that we see investors change their portfolio construction.
Right.
So that money doesn't actually leave the market; it just goes to other parts of the market.
Okay, nice to see. Very, very busy week that we've got coming up, so great to get a setup from you. Fiona Boll, S&P Dow Jones Indices Global Head of Equities. Core 6 looks like this morning. Let's talk a little bit about where we're seeing the market moving. And as you can see, defence stocks are under pressure. The safety bid that we were talking about last week, Nestle rolling over a little bit this morning, but pharma's doing well. But the real story this morning is defence down, tech up, and that seems to be one of the big themes that we're watching. There's also a bit of M&A that we need to be focusing on as well. Chloe Melly's got the details of that.
Good morning, guys. So actually, Anglo American did open a little bit higher this morning, but is now currently down almost 2% after rejecting an unexpected bid from BHP over the weekend. So this was an attempt by BHP to thwart the ongoing tie-up that we have got between Teck Resources and Anglo American. And it seems that investors were initially maybe happy about the outcome and now perhaps are asking some questions about it. So we'll see how this evolves throughout the day. Moving on to Bayer, the pharmaceutical company is up this morning. Oh, no, the Julius Baer, sorry, the private bank is down this morning after saying that the profit will be lower in 2025 because of a loan loss provisions related to real estate lending. Moving on now to defense, and defense this morning is down as well across the board. We've got Rheinmetall, Thales, Leonardo and Hensoldt. They are reacting to the upcoming meeting that we have got between Ukraine and the US to discuss Ukraine's NATO membership and the exchange of territories. So we are moving perhaps closer to peace, and that is leading to some negative movements across the defense industry in Europe. And finally, we have got some movement in two banks in Europe. Standard Chartered and Bank of Ireland are both up this morning after Morgan Stanley upgraded both of them to an overweight rating, saying that they have above consensus revenue growth to look forward to, and therefore we are up quite strongly this morning for those two.
All right, Chloe Melly from our equities team walking us through some of those early movers. We should talk about Bayer as well. It is one of the major movers that we are seeing today. They have reached a specific endpoint study on one of their experimental drugs, and it's moving the market in a really big way. In fact, it's your biggest index contributor to the DAX. You can see those shares at the bottom of your screen down higher by over 8%. Coming up on the program, we go right back to the M&A story, or the M&A that wasn't. BHP walking away from Anglo again, as Chloe just mentioned. No longer considering a combination of the two companies, but two stocks that are very much moving this morning. We're going to bring you the details and the drama behind the scenes coming up next. This is Bloomberg.
Welcome back. You're watching the opening trade. We're 17 minutes into a session which looks fairly positive at the moment. I think we've probably got John Williams to thank for that. The New York Fed president giving the market a lift Friday, and that is rolling into Monday here in Europe. There's a bunch of other stories, though, that we're folding into the market, too, that I think are worth paying attention to. You've got an oil story this morning. You've also got a mining story as well, which I think is front and centre. Now, the story over the weekend was very much about BHP once again trying to have another fresh look at Anglo American. We've seen this movie before. We thought we might get a little bit of a sequel, but it doesn't look like it's going to go anywhere in a hurry. We've seen the deal that maybe was proposed by Mike Henry not being received well over at Anglo, and it looks like the deal we are going to see ongoing is the deal with the smaller rival Teck out of Canada, Teck Resources. Dinesh Nair joins us now out of Dubai to talk about this. Dinesh, why did Mike Henry have another go? I thought the idea was that he was comfortable, confident in the organic outlook, but it looks like he's decided that actually at the last minute he was going to try and still crash the Teck party. He walked away, but kind of just talk me through the significance of all of this.
Yeah, no, thanks for having me. It's quite fascinating, this whole, as you said, the movie between BHP and Anglo. So if you remember, BHP approached Anglo American last year with a bit of a complicated structured deal, which didn't go through. Anglo said no. Anglo then restructured its business. It's been doing quite a lot of asset disposals and spin-offs, etc. as part of that. And then they went really bold and, with a merger plan with Tech Resources. And the last thing probably Anglo, what they want to do is to engage again with BHP and get bought by BHP. In the tech deal, Anglo is, even though they call it a merger of equals, they do get an upper hand. In theory, they are buying tech. So they probably are not very keen to engage with BHP. And now it also depends on what terms BHP offered. We don't have a lot of details into that. We know that it was a mix of cash and stock, but it wasn't appealing enough to engage Anglo and get them on the table. So this was a pretty short-lived affair, and BHP's probably walked away, which means they can't come back for a few months now.
Well, Dinesh, that's the deal structure. Just talk to us about the value that Anglo would have provided to BHP. How much of this is really all about copper access?
It is pretty much all about copper. So what we're seeing in the mining world today is that there are few copper assets of size. Copper is in incredible demand, as we all know, and it takes a long time to mine copper. So the opportunity here for some of the larger players is to, like BHP and Rio Tinto, is to go after some of the available assets, which is what they did with Anglo American last year. But when they see a company like Anglo and another potential target, Tech, merging, that kind of takes away a lot of the opportunity set in the copper space. That is why, despite a lot of people expecting that BHP has moved on after the last year's saga, they come back because they know that once the merger between Anglo and Tech goes through, it becomes very difficult to do anything in copper. Now, this is again a consolidation play for copper in the industry. Everyone wants a piece of it. There aren't many assets available.
In terms of what we should expect now, what happens next? Are we going to see more M&A? What does 2026 deliver? Is the Anglo deal with Tech going to go through? Kind of just give us a sense of kind of the next moves that we're going to see.
Yeah, it's anyone's game what is going to happen next. But there are a lot of moving parts here. You would assume that Anglo now really focused on Tech merger. We'll hope to close it. It's not going to be very easy. We've already heard that the Canadian government has still some reservations about it, but they will try and get that done. Tech also is not completely immune from someone looking at them. There are rumors in the market that, say, someone like a Rio Tinto could look at Tech. So they are not completely away from being a target as well. So this just continues to raise this question: what does BHP do? What does Rio Tinto do? And what does Glencore do? Probably. So there's more to come in this. It's quite, as I said, it's quite fascinating what's happening. It kind of really started when Glencore approached Tech a few years back, and then the Anglo-American approach by BHP. So we think there is more to come here. But for now, I think Anglo-American will be looking to close the Tech deal as early as possible.
An exciting space for sure. It feels like M&A is back on the table, and then we get these kind of false starts like we did over the weekend. Bloomberg's Dinesh Nair joining us from Dubai, of course, all over this deal story. We thank you so much. Another conversation that we're continuing to follow this morning is trade talks. Kind of a little bit of a blast from the past. The EU and the United States having that conversation in Brussels today as sticking points on the July tariff deal still remain. Politico reporting that the European Union set to request tariff exemptions for what I think are the right priorities: alcohol, pasta, and cheese, among others. Bloomberg's Brussels Bureau's chief, Suzanne Lynch, joins us now. Suzanne, just walk us through the conversations that are actually being had on the table. We had a framework deal. What are the details that need to be figured out now?
Yeah, this is a very significant meeting here in Brussels today. EU trade ministers from across the EU are gathering for a meeting, and very significantly, they're being joined by the US Commerce Secretary, Howard Lutnick, and the US Ihor Brusylo here for that meeting. They're joining around lunchtime. So very significant moment. That doesn't usually happen with these EU meetings, that you get these heavy hitters from the US administration attending. Now, in terms of what they're looking for, as you said there, we remember over the summer the EU and the US struck that trade deal with a 15% ceiling. However, that 15% tariff ceiling didn't apply to absolutely everything, and the EU has been looking for some wiggle room on this, some exemptions. So, for example, wine and spirits, that's a big ask for some countries like France and Italy, big exporters of those products. Also, Italian pasta has been hit, and Donald Trump has threatened to hit pasta even more so, accusing the Italians of dumping their pasta in the United States. Italy has pushed back on that. But I think really the big one is steel and aluminium. The EU is still being hit by 50% tariffs in this field. And significantly, this also impacts derivative products that are made from these. So I think there's a big push, a real wish from the European side that they can strike some kind of deal on this. But the US has said from the beginning, over the last few months, that this is part of a kind of a more of a global approach as the US and other trading partners try to look at the issue of steel overcapacity.
How much leverage does Europe have right now in these talks?
Well, you know what? The timing of this is very interesting because this meeting today is happening just at a crunch moment for the peace talks in Ukraine. And I think what's happening in Geneva, what's been happening over the weekend about Ukraine is weighing on this meeting, no matter what ministers say about the two issues being different. At the end of the day, the Europeans are trying to keep the United States engaged productively in Ukraine, and they're trying to shape and come up with a better, as they see it, a peace plan for Ukraine. So, yes, how much leverage does Europe have when it's trying to keep the US on board? It's trying to get the US over to its side at the moment in these highly important talks in Ukraine. So that's a big issue. I don't know if we're going to get huge breakthroughs today, but I do think that it's significant that the conversations are happening. So let's see what Lutnick and the USTR Greer says when they arrive for these meetings at lunchtime here.
Fascinating that these two conversations in Brussels and Geneva may actually be related when it comes to the United States' relationship with Europe. Suzanne, just a final question to you. Talk to us a little bit, though, about how this might change some of the investment promises that Ursula von der Leyen had made back in July. Things like LNG, things like technology. Are those investment promises under threat right now?
I don't think so. I think you're right. A big part of the deal that was signed by Ursula von der Leyen and Donald Trump in Scotland in July was that the EU would commit to buying about $750 billion worth of US energy. Now, as a lot of analysts pointed out afterwards, the EU itself cannot go in and buy energy, that it doesn't have the remit to do that. That's done by individual member states. But I think, the European member states, European businesses are still on track. They're saying they're going to do that. How people are going to quantify that? Is there going to be somebody at the end of the first Donald Trump presidency totting up how much people have spent? Let's see. But I do think we may hear a bit as well today in these meetings, the frustration that the US has expressed about certain EU legislation, particularly when it comes to the regulation of big tech, for example, and environmental legislation. Now, the EU has already kind of simplified, as they put it, some of these laws over the last few weeks and months. Yeah. They would say it was happening anyway. The European Union itself was hearing that pushback from Europe, not just the US.
Yep. Suzanne, great stuff. Thank you for the update. Suzanne Lynch, Bloomberg's Brussels bureau chief, on the latest on the trade talks. Remember, we're going to be talking to Howard Lutnick a little bit later on. Look forward to that conversation right here on Bloomberg.
Welcome back to the opening trade. 30 minutes into today's session, green on the screen across the board. But it feels like the index story tells you kind of what's driving this market. Let me walk you through it. The outperformer this morning is the DAX, despite the fact that we are seeing some of the defense take a hiccup. Guy's going to walk you through it in a minute. But it's interesting that the outperformer is the German index due to several different sectors that are helping it higher by 1%. Your underperformer is the CAC 40. There might be a little bit of a political overhang here. That seems to be where the underperformer is. A mining conversation happening in the UK, but net, green on the screen, some of that guy might be coming from over there in the States.
Bunch of things I want to point out, Kriti. We'll get into the details of what you've just been talking about in just a moment. Volume is very light this morning. Pay attention to that. Thanksgiving week, is that going to be a significant factor? Is it going to tell you something about the confidence around the moves that we're seeing? In terms of the ratio, look, you've got 4-1 in terms of ups and downs. That, I think, is significant as well. The market feels like it's on the front foot. Is that just a hangover from what we've seen in the States Friday into Monday? I think there's an element of that too. Let's talk a little bit about the kind of the gainers and where we're seeing some of the lead coming from this morning. Siemens Energy, that's one of the reasons why the German market is as strong as it is this morning. Look at that, up by 5.5%. You've also got some of the tech names doing relatively well in Europe as well. That's a factor that is helping out the German market, as is, take a look at this, Bayer. Bayer is up by 11%. Some decent drug news coming through, giving that stock a significant lift. German stocks doing well, so it's not just the defence laggards that are holding back the German market. HSBC had a strong session out in Asia, in the Hong Kong market. It's having a good session in the London market as well. So banks, a positive story for the UK market. Let's talk about the defence names, though. Let's talk about where we're seeing the weakness today. Rheinmetall is down again. It had a terrible week last week. That is continuing. It's off its lows this morning, but the defence sector is definitely under pressure. But the German market has enough positives to outweigh the negatives this morning. National Grid is down by 1.41%, so the kind of yielding stocks, the utility stocks, are underperforming today. No real surprise. Roche is also giving back a little bit of ground as well. Feels like a more risk-on kind of a market this morning, but not backed critically by decent volume, which I think is a significant tell on what we're seeing in this market this morning.
Everyone's bracing for Thanksgiving. Everyone's putting their Christmas tree up. Very exciting stuff in these markets. Certainly red and green, very on theme for the holidays. Let's talk about what else you need to know this morning. Alibaba shares have jumped after the strong debut of the company's new AI app, boding well for a longer-term effort to build a rival to OpenAI's ChatGPT. The app, called Qwen, was downloaded more than 10 million times in the week after its relaunch. Follows a move this month to rename and freshen up the Chinese e-commerce giant's pre-existing apps, unifying the services under the Qwen banner. Let's go from Asia right here in Europe. Italy has achieved its first upgrade from Moody's ratings, and get this, more than 23 years. It marks a win for Premier Giorgia Meloni. Moody's lifting the country's credit score to Baa2, with the outlook now viewed as stable. Moody's was the last holdout among rating assessors, having waited for Meloni to enter her 4th year in office, before finally raising its credit score and recognizing Rome's campaign to repair its public finances. Let's bring it even more local right back here to the UK, where CEOs are bracing for Chancellor Rachel Reeves to pile further costs on their businesses in this week's budget. Bloomberg has spoken to some who are warning they'll stop investing in the country altogether. The government pushes ahead with some of the mooted tax hikes. The managing director of UK airports for Vansy and GIP says plans for a second runway at Gatwick could be jeopardized if a proposed rise in business rates goes ahead. Guy?
Well, it's news this morning that maybe follows on from this talk, maybe that actually energy costs could be a factor to offset some of that. But the complication around UK taxes is getting greater and greater. It's a tough one to see through, to understand. There's also a report out this morning of UK media that the OBR, the Office of Budget Responsibility, is going to lower its forecast for growth in 26 and the remainder of the Parliament as well. So just kind of bear that in mind. How do you trade this, though? What is it we're going to be looking for in this budget? Is it going to be the effects of the budget on taxation and what happens with the economy? Or is it going to be a kind of almost derivative of that? What does it mean for Rachel Reeves' political career going forward, and by extension her bosses as well, the Prime Minister? How stable are they in terms of their grip on this party, and how critical will this budget be? So I think there's a number of different ways of reading this. The gilt market had a really bumpy week last week. It's going to have a bumpy week this week, I suspect, as well.
Absolutely. It's fascinating. And I think the clearest read of that, you saw it in the pound, when you saw actually the pound weaken more on those political jitters than it did on the actual U-turn on some of the budget. Let's talk a little bit how investors are positioning ahead of that risk event. I'm pleased to say Chris Rose, president of ICE Futures Europe at Intercontinental Exchange, joins us around the table. Chris, you're the perfect guest to talk about this. How are investors positioning? What are they thinking?
Well, I think it's worth sort of stepping back slightly and looking at where we are relative to the spring statement. It was 5 months ago where we got a little bit of a hint of what may come this week. And I think fundamentally coming into the week, it's about fine-tuning rather than a fundamental change, is how the market is positioned. And I think if you look at maybe the market signal or the wisdom of the crowd, the aggregate expectation in the market is really for one of sort of steady as she goes in terms of market positioning. If you look at cable, it's relatively trapped within a range. If you look at gilts, even though it was a bumpy week, it's still within the 440, 460 range, which is consistent with where it's been this year. I think the more interesting picture is really the short rates and what the Bank of England might do in terms of delivering a cut in the December meeting, which is priced for 85% if you look at...
Do you think the gilt market's trading off the Bank of England, not the politics, not the budget?
I think we actually picked this up earlier from one of your earlier guests. The central bank positioning in terms of the Fed, the Bank of England, what the ECB have already done, is really underpinning valuation across equities and in fixed income. And I think that is not the most important thing this week, but it is a reassuring underpinning to what valuations are in the bond market at the moment.
Does that show up in the equity market too?
Well, equities had a pretty good run year to date. Volatility is relatively stable and fairly low based on historical standards. So I think, yeah, to some degree, it's clearly not going to be a really strong start to the week because of the risk events that we see this week. Yep. But clearly there is an underpinning, and there's been a positive performance this year in equities.
Just coming back to the UK story, just more broadly, just to get an understanding of what happens next. If the budget does not deliver politically, if Rachel Reeves' position is questioned off the back of this, and by extension Keir Starmer's, is that more significant than the Bank of England? Isn't the Bank of England just going to react to that? Isn't the Bank of England reactive to the politics and the fiscal story rather than being the lead here? I'm just trying to understand how the sequencing works.
Yeah, I think what delivers politically is what's right for the economy. And clearly there's got to be a balance between business and growth, which there's clearly an agenda there the Labour Party have been very clear on, and some tough choices. And those tough choices are a result of the fiscal backdrop and where pricing is at the moment. But I think, what would be success? Success would be fine-tuning. It would be delivering within the mandate, within the fiscal rules, and ensuring that the market is calm and that's well received. And I think that's generally what the market is set up for this week.
So walk us through what is a credible indicator of success here? From the investors you speak to, what would they say is, okay, it's 4 p.m. on Wednesday, Rachel Reeves has said her spiel, yep. This is a win. What would that look like?
Market pricing around where it is at the moment. I think that's the key. If you look at 10-year gilts...
But what do they need to hear?
I think they need to hear that some modifications have been made that are proportionate, that are not too radical, that deliver both on the growth agenda as well as making tough choices and fine-tuning. I think if we get that outcome, market pricing is consistent with that. Of course, there are markets that are used for hedging that risk, and that's maybe something we can get to in a second. But overall, I think success looks like pricing currently where it is.
Let's talk about that. You guys let's talk about kind of event risk. Got the polymarket story now developing with you guys. You're partnering up. I'm curious to know how you see events like the budget developing and what products are going to be available, and kind of how events like this are going to change as a result of my ability maybe to look at risk events differently now that I can kind of bet on single events almost. Bet is the wrong word, but I can take a position on a single event.
Yeah, well, I think derivative contracts in general are based on events. They're driven by pricing and risk events. And, if you look at the futures and options market, which has had a tremendous growth at ICE in recent years, it really connects small, medium and large investors in one single market with one price signal. To my point, the wisdom of the crowd. And I think if you look at, say, the ICE SONIA market, which is really the benchmark for interest rates...
These aren't specific event contracts, which it feels like we're moving towards.
Yeah, I mean, there is a natural evolution, particularly on the retail side, towards those very specific bets. But really in the institutional space, the bit of the business that I represent, we have seen tremendous growth in SONIA. We're up 73% year over year in terms of open interest. In gilts, we're up 50% year over year in terms of open interest. And that's a signal that investors, both small, medium and large, are turning to the derivatives market to lock in those price risks and look to those markets to allocate their portfolio. And that's really what's been driving the business. A wider trend, actually, that's been going on across equities and in fixed income is the role of the option market. Yeah. That's really been the driver of the growth this year in the ICE interest rate business. We're up 96% in terms of open interest this year. We're on track for a record year in terms of transactions in UK markets. So I think that picture is a sign of market health, a sign that our customers are turning to us to hedge these price events, these risk events coming this week. And I think from there you can extract an even richer signal and think about how the market is set up.
And you can see those jitters really showing up in the equity markets around the world. This was a conversation we're having about the United States earlier, that some of these rollovers are ultimately driven by hedges that are getting piled up. Chris Rose, president of ICE Futures Europe over Intercontinental Exchange, walking us through some of that positioning story ahead, of course, of the UK budget. Speaking of that budget, UK Chancellor Rachel Reeves expected to deliver at 12:30 p.m. London time on Wednesday. We, of course, will have full coverage right here on Bloomberg Television, not only on Wednesday, but, of course, on the day after as well. The opening trade will break down the numbers. We've got key businesses and political voices walking us through what they heard and how they feel the day after, that Thursday, right here in the opening trade.
OK, let's talk about what is happening in French politics. We'll move over from the UK and talk about what is happening on the other side of the channel. We are closely watching the OAT Bund spread this morning. France's National Assembly rejecting part of the 26 budget. Did so in the early hours of Saturday morning. What weekend? Joining us now for more on what this all means for Prime Minister Sébastien Lecornu's plans to tackle France's big deficit is Caroline Conan, live from Paris. Caro, what happened and what does it tell us about what happened next?
The National Assembly rejected the revenue chapter of the French budget, and that was almost unanimous. 404 votes against it, 84 abstentions, and only one MP in favor of this revenue chapter of the budget. So that kind of shows you the amount of rejection of the budget, including within Macron's camp, after opposition parties, especially the far left and the far right, have added hundreds of amendments, billion and billion of euros of new taxes, as much as 40 billion euros of new taxes, making this revenue chapter of the budget unacceptable even for Macron's party. Now, what happens next is that the initial text of the government will go to the Senate, which has a center-right majority, so is very unlikely to put back all these new taxes, which of course could be a relief for some multinationals, for some of the wealthy individuals who were targeted by all these new taxes. But of course, this really puts Lecornu right in the middle again of this political crisis in France, because he had promised to give Parliament the upper hand in these budget negotiations. So clearly his future still hangs by a thread. Even the budget minister, Montchalin, said we could see the beginning again of a new financial crisis in France.
Here we go again. Caroline, thank you very much indeed for updating us. We're going to pay a lot of attention to this. Caroline Conan joining us out of Paris. Coming up, we're going to turn our attention to what is happening with the Ukrainian peace talks underway. We're going to bring you a conversation with Ihor Brusylo, Deputy Head of the Office of the President of Ukraine. That conversation with Oliver Crook next in Brussels. This is Bloomberg. European defence stocks under pressure this morning as we watch what is developing in and around Ukraine. The Europeans and the Ukrainians very much pushing for the US to make changes to its peace plan following the talks we've seen over the weekend in Geneva. Bloomberg now understands the controversial 28-point plan was the result of several weeks of negotiations between Steve Witkoff and his Russian counterpart. They excluded Ukraine and its allies. US Secretary of State Marco Rubio says Ukrainian peace talks in Geneva were productive. Let's get more on this. Let's go to Brussels and join our Europe correspondent, Oliver Crook.
That's right, Guy. The focus over the last 24 hours after that real sort of bombshell of that 28-point plan that arrived in the laps of the Ukrainians, the Europeans, and the world alike has basically been trying to hash out what the details of this plan are going to be going forward. And we're very pleased to be joined now by Ihor Brusylo, who is the deputy head of Zelenskyy's office. Mr. Brusylo, thank you so much for taking the time in what has no doubt been a very complicated last few days for you. I'd like to begin, if we can, by talking about what we've seen in Geneva. We've heard from Marco Rubio. He says that there's been significant progress. In the context of the negotiations, what does significant progress mean?
Yes, thank you. Good morning to all of you. Thank you for giving this opportunity to talk today. Indeed, yesterday that was a very heavy workload of diplomacy engaged by Ukraine and the United States. And first of all, we appreciate all the efforts done by the current administration, by President Trump himself, and by Marco Rubio as a negotiator, determined by him to hash out the plan that is reliable, robust, and acceptable for both parties. The peace cannot be done at the cost of Ukraine. We shall keep in mind and remember that Ukraine became the victim of this aggression from the Russian side, and to make this peace at the cost of Ukraine will be at least not fair. So the teams engaged in heavy diplomacy yesterday, and they discussed point by point the plan that has to be presented both to the President of Ukraine, to the President of the United States, and of course there is the third stakeholder in this process, and this is the Russian Federation. So the first thing for our Chief of Staff, which is the main negotiator determined by President Zelensky, who has a very good track record of dealing with these issues, and a main negotiator from Ukraine to deliver the fair peace, is that we need to present our position in a manner that would accommodate and would explain why we choose this path on this road to peace.
And the questions about more of the specifics. At this stage, the document that has gone back and forth between the hands of the Russians, the Americans, and now the Ukrainians, with the last document that is now back in the Americans' hands, are you satisfied that the document that you have given after that 24 hours of negotiation, is that an agreement that Ukraine can live with?
This is the process and diplomatic process. And first of all, before saying that some final outcomes have been reached, we need to see that the other party accepts all the positions that our delegation presented to them. We cannot just cherry pick or pluck some of the provisions and say this is okay for us and this is not okay for us. You have to look at it as a whole picture. A comprehensive approach should be applied. And I believe that negotiations will continue. This is not yet the end. And when the top negotiators finish their work, there will be some work done by the expert teams, because the main thing is in the details. And when you manage to deal with the details, then you can see the comprehensive picture. Of course, we are talking about the need of the ceasefire, first of all, to start a really reliable and good negotiations to follow from that. Without the ceasefire, you know, it's a little bit useless to talk about peace, because when the barrage of missiles continue to fly over your heads and into the civilian objects, it's very difficult to continue this way. So it's first of all, the idea was to present the positions and then to touch base on them at a later stage. Maybe in this couple of days, the negotiations will continue, but more on a working level.
I'd like to get into some of the specifics that this plan laid out. There is the question, of course, and this is point number 5 from the original document, Ukraine will receive reliable security guarantees. That is the end of that sentence. What do reliable security guarantees look like for Ukraine? It's an easy and it's a simple idea. It's a very complicated thing to put into effect.
First of all, the main security guarantee for Ukraine for many years to come will be the air defense shield. And this is what we stem from. And the insurance that these systems, which are needed to protect our skies and meaning to protect the lives of our people, will be delivered in time. And it's also about the size of the Ukrainian army. So we cannot say that we will agree to downsize the Ukrainian army without any other hefty contribution from the guarantors of this security. This is what we need to look at very soberly, and to keep in mind that Ukrainian army is the only thing that can, the only force that can ensure the protection for Ukraine. So this is our two principal things that we need from the starting point.
We understand that the Europeans are also pushing for an Article 5-like construction for Ukraine, maybe an Article 5 light. Is that something that is being actively negotiated? And in that context, is also NATO membership for Ukraine now officially off the table?
Well, I think that, first of all, this is for NATO to decide who can become the member of this organization, of this alliance. But for Ukraine, well, it's important not to enshrine the provision of remaining neutral for all the time. Again, this is the alliance of countries who make the organization. So it's up to them to say whether they agree to leave the door open to Ukraine. For Ukraine, it's not off the table completely. We are still in the negotiation process, and we need to work out as robust security guarantees as possible. And this is one of the provisions that can be a security guarantee for Ukraine. So this is still on the table.
Are there plans for President Zelensky and President Trump to speak in the coming days?
Yes, this plan was from the beginning when Secretary of the Army Driscoll came to Ukraine 4 days ago presenting this plan, the American initiative. And the idea was that the teams will work in stages, first of all, on the expert level and then on the working level. And when all the issues have been settled and some of them remain mooted, I mean, the territorial issues, for example, then the presidents will get in touch to talk over them and probably set the stage for the meeting for them to finalize the idea.
And then a final question on the corruption scandal that is ongoing within Ukraine. Obviously something that has concerned allies and something that your adversaries and enemies will be exploiting. Can you give us an update on the investigation? When will we expect the outcome of the audits? Do you expect any other resignations within the government?
The main thing for the law enforcement agencies and for the anti-graft agencies to continue their investigations. That has been the case from the very beginning, and understanding that, well, everyone has to do their job, and without any media coverage or media or commercial posture. This should be done in a proper manner on a legal basis, and these investigations and indictments should end up in the court and file all the cases that will bring to the prosecution. And this is the main idea. So we are monitoring the situation carefully and believe that this will be done in a proper manner on a legal basis, as should be.
Ihor Brusylo, thank you so much for taking the time today. That is the deputy head of President Zelensky's office as we reach that sort of high moment of a negotiation between the United States, between Ukraine and in Russia that will hopefully yield a discussion and a potentially outcome that is livable for both Ukraine, Russia and the United States, and hopefully ending this war. Thank you so much for your time today, Kriti. With that, I'll hand it back to you.
Thank you.
Oliver Crook, of course, joining us in Brussels with a member of Volodymyr Zelensky's cabinet. We thank you so much. It's fascinating. This is the story that is driving parts of the market today. We've seen that real unwind in the defense story. We've seen it in the oil market as well, amid a backdrop of green on the screen.
Absolutely. Defence stocks got hit hard last week. They are continuing that trend this morning. Is that a market signal that the market believes that actually there is the possibility of a deal coming out of this, and defence stocks, therefore, will be hit? I think the nat gas story is also interesting this morning. European gas below 30 for the first time since May 2024 was the headline a little bit earlier on. It's getting warmer as well, so just bear that in mind. So that's a factor in that as well. So I think energy is reacting to this. I think defence stocks are reacting to this. And you can certainly see the effects of that in the market this morning.
Yeah, and this is something that has moved, and even in the bond market as well. You've seen some of the spreads move on some of those defence promises as well. So any sort of changes on whether or not that's undermined will move both the equity, the commodity, and the bond market as well. There's lots going on. There's green across the screen. There's a tech rally happening here. There's a pharma rally happening here. There's lots moving this market upwards amid a very light volume day. That does it for the opening trade. The Pulse is up next. This is Bloomberg.